Welcome to StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, making professional trading simple. And stocks closed a little bit lower today. Not so much, not a big deal, but overhead resistance held. So, for those of you that got short up here, paid off a little bit today. It wasn't a huge move, especially in the Dow, just down 50 points from this high up here of 1050. And we'll see if it ends up being short-lived. We've seen in the past that as we hit the top, like this last time, we retest the high once, then we retested it twice before we finally ended up moving our way down towards the bottom side of this support. Maybe we see the same thing here. This really just kind of looks like a little pullback to me at this point. A little bit early. I don't have enough information yet to discern what that is, but as of right now, today, as I'm looking at it, just looks like a little pullback. Could see a little bit of a run right back up to that again. Not seeing much in the terms of volatility early in the week on an options expiration week. Monday and Tuesday being very quiet so far. A little bit of a move down this afternoon, and if you want to call it tradable, uh, very, very, very difficult to do right now. Have to continue to look at your stocks for actual trading opportunities. Here it is, turning again at upper resistance. Coming back down, getting near, but still once again in limbo here. 50 points from the high, 50 points from the next, what I would call logical place of resistance, or support, sorry. That would be 10,400. Not down there yet. And we continue to watch this trading range. This has become very tricky indeed to play. Watching for ultimately a break up here or a break down here. NDX on a 60-minute. This one had a little bit of a tumble here towards the end of the day. Once it hit the 50 period moving average, though, on the 60-minute, you can see how it bounced right back up. Finished in this kind of a funny looking formation here. It's making kind of an M formation, a little rounded M. It did retest the high, though. Notice how it got back up here towards that 1815 mark before, like everything else, being turned away. From a daily standpoint, still very choppy. All this movement in here, the candles don't make any sense, not giving us any direction from a candle context. So we just continue to watch the charts and watch support and resistance, wait for our break of it when it happens. From a daily standpoint, or a weekly standpoint, sorry, you can see this high base still intact. We're hanging out right up there towards resistance. It is only Tuesday, so we have a little ways to go yet, but keeping in mind, this is a high base formation. That is bullish. SPX on a 60-minute, coming back down, hitting a low of 1105, finishing back up here 1107. Looking the same as the NASDAQ, this little M formation here. The golden arches are kind of starting to form here. Coming back to the 1105 area, it's been, you know what, 1105, 1110, 1100, all of those little increments of 5 have shown to be somewhat resistance or support in the past. But important part is it held up here at the overhead resistance. From a daily standpoint, you can see it turning back here as well. Still looking for it to come back and maybe revisit these levels. I would still continue to watch these overhead levels, 1115 and 1085 for your break. From a weekly standpoint, doing the exact same thing the NASDAQ is, high basing, tiny, small, little doji up here, making trading this week so far extremely, extremely difficult if you're an indice trader. The VIX moving up ever so slightly, so yes, it did confirm the move to the downside today. Just still not enough to be of any real consequence. There is no fear in the market as of yet. Even this little move up doesn't tell us anything. We will look at the weekly here. You can see the little tiny doji it's forming as well. Fear is not evident right now. I'm not sure we're going to see much of it happen before Christmas time. Apple on a 60-minute, down $2.81 again. Apple kind of putting in that golden arches type of a look we saw on the indices. Turning itself away, but still well within this range that I've been talking about. You know, above 200 for a long, below 189 for a short. Not seeing any of that here. Still very difficult to trade Apple. It is still abiding by a lot of these support and resistance rules, coming back down and, managing to close above the 50-period moving average. But, from a daily standpoint, just a trickle down here. Still really nothing to trade within Apple itself. From an intraday standpoint, yeah, a $2 move, $3 move is actually pretty good within Apple. So if you're intraday trading it, yeah, you might be able to pull a few pennies here and there. But overall, from a swing trader's environment, you're just sitting here waiting for something to happen. If you were long from back here or leaving long from back here, you're really not that much further ahead than you were a month, 2 months ago. That's the problem with stocks when they start to move sideways like this. Very difficult to make any money. If you went long way back here at the 190 area, you're $4 up after, what, 2 months? So very hard to swing trade this right now until it gets a little bit more established trend. From a weekly standpoint, still only Tuesday, but not going anywhere. Small little doji candle as we're seeing on the rest of the indices. The interesting part is that we are starting to see the MACD cross the indicator line. I did bring this up in the weekend video. I thought I'd reiterate it here again. That does not mean that we're going to tumble away into nothingness, though. It just means if you're long Apple, you might want to be a little cautious about your stops. I want to move some stops up. ABT on a 60-minute, you can see it falling sideways here. We've had really no trade in this in the last couple days. It's moving straight sideways. I'm really looking for a break below here or a break above this little area here to get long in the short term, but ABT's done nothing, moving sideways. AVY on a 60-minute, it was down 75 cents today. You can see from a daily standpoint, we're still trapped between the 20-day and the 50-day. I'm still waiting for a break of this 37 area and or a break of the 39 area to get long or short. Be watching this closely over the next 2 days for a move. This thing's been consolidating for a while. It's going to move. It's going to move sooner or later here. So be watching over the next couple days. ESS ended up being a pretty good trade. You can see as it broke the triangle here, it's given you opportunities to play it to the long side. I still like it over, I liked it over 80, I liked it over the triangle. I liked it over 83. I liked it over 84. Over 85.50 is another good place to get long if you're not in already. FAS on a 60-minute. Moving slowly back down here to this area into kind of a potential double bottoming area. Just finding some support down here towards the end of the day. Very difficult to play this once again. If you're playing it from an intraday standpoint and you're on top of it from the start of the day, there have been some opportunities here to play this, but this was the first, maybe today was the first real good intraday trading opportunity for FAS in a while. Nice long bar to the downside. I still would not be swing trading this yet. It is still in kind of an in-between mode here. FAZ on a 60-minute. You can see it finally get back up and above this area here. We were watching it fall from it down into here, but today pulling itself back up and making a bullish move towards the top. I'll tell you what I'm really watching though. These type of moves on a 60-minute are just really kind of a precursor to what I look at here. And look how we on the daily managed to come back up and stop right at this overhead resistance line. Now, I will say we have been testing it and testing it and testing it. And it is very common that when you test it enough, eventually you can break it. So we are still looking for a close up and above the $21 area. Maybe we get some sort of move tomorrow. Watch this closely tomorrow. Let's see if this thing remains within this triangle or if we finally get a break over and above it. That would be a half-decent trade. I think a very defensible trade if you can get in this thing just above the triangle. So let's call it just above $20.75. Put about a 40-50 cent stop on it below it. Let it run. See what happens. Icon on a 60-minute. Pulling back here a little bit today. We saw this move right back up into the 50. I told you, a good place to take profit would be if it broke above this level. Take it to the 50 or then above this level here, and you can see where it bounced off that 50-day moving average. Very common. Now it might base sideways. If you're not in this yet, you're looking for a break above here or a break below down here to get long or short. And that'll do it for today's video. Still, it's made it great for me because my videos I can keep within about 10 minutes. It's made it great for you because you don't have to spend 15-20 minutes with me. But it's been terrible for trading overall. If you catch a little bit of the intraday moves, you're catching them on stocks. Very difficult to make any money on the indices over the last couple days. Actually, over the last few weeks. Lots of gaps in here that we don't see reflected in this particular chart. But if I went to a diamonds chart, you can see all the little gaps that have been happening in here. Just keep in mind that this overhead resistance continuing to hold solid. Support has been doing the same thing as well. However, we are quite a distance from the support level, so we won't I'm not really going to be all that concerned about the support level quite yet until we get down into this area. Right now, let's continue to focus on this overhead resistance area, waiting and looking for a potential break up and above it. Let's see if we get any volatility into the last 3 days of options expiration week. I will be back with you again tomorrow night. Protect your money. Nobody cares more about it than you do.